Yo, my friends, what is going on? Long time no see. So in this video, I wanted to do a relatively quick update on just kind of what I'm looking for as far as SPY. If you follow me on Twitter, or if you haven't done so already, please do so. Colin_Gladman. Easiest way to keep up with everything that I think is going on. We'll talk a little bit about SPY. We'll talk a little bit about AMC. I'll try to keep this video and update relatively short. Like I said, just so you guys know what I'm looking for. If you are new to the channel, thank you. I appreciate you. Please like and subscribe, all that YouTube stuff. If you're an old dog, you guys know the deal. Love you guys. Appreciate you. Nothing I'm giving you is financial advice. Everything is for informational and educational purposes. I just always want you guys to make awesome decisions for yourself, your family, and your portfolio. So having said that, by the way, check this out. Got my Thor tin in, my popcorn tin in. Super sweet. Took way too long. AMC needs to be doing more stuff like this, but they got to cut down on how much time it took. I literally ordered this in June or July or something like that. So, it's just way too much time. But it is super cool. So, I got it right here. Look. It's awesome. So, I love collecting stuff like that. I think AMC's missing out on a big opportunity if they don't have merchandise, collectibles, things of that nature. Anyway, let's jump into the video. So, futures first. So, we had a massive sell-off towards the end of the day on SPY. You could look at that as people potentially taking profit, maybe a little scared of what could be potentially the numbers for PPI tomorrow. And I tweeted this out. So, tomorrow morning before the market opens, the PPI, the Producer Price Index, is going to be sent out tomorrow morning at 8:30. So that's going to be my time. I'm Central, so that's going to be 7:30 my time. So it's an hour before market opens. And it essentially is going to be the people who are selling us stuff, what kind of prices are they? So there's two ways to look at inflation. One is the CPI, the consumer, and then one is the producer. And so, both those, obviously have an effect. CPI is the one that we talk about the most, but PPI is going to be coming out tomorrow morning as well. So, right here on futures, you can see there is a massive sell-off. And right now, futures, while yes, it is green, I don't really like this formation right here. This is kind of giving me a bear flag vibe. So what a bear flag is, you can see right here, is a very strong move down. Then it kind of trades in this sort of like one of those just ascending channels upwards. If you follow me on Twitter, I'm a big, wedge and channel guy that essentially, those slight, whether it's an ascending wedge or an ascending channel, those are going to break down majority of the time, just like descending channels and descending wedges are going to break up a lot of the time. So bear flag is one like this that has, just a channel that's just kind of running up, and bull flag is essentially the exact opposite. So here's a good example right here of a bull flag. So a bull flag is just a channel right here, slowly going down, lots of touch points that eventually leads to the breakout. So bull flag, boom. Bear flag, maybe, boom. Like I said, if you follow me on Twitter, you know that I believe that there's still one more leg down in the market. And so here's essentially what I'm tracking. I'll just kind of walk you through my thesis. So, I get a lot of hate because, you're always negative or preaching downside or anything like that. And I'm just, no, that's not what I do. I just, I ride the waves, and I'm not going to sit there and, fight the trend and just stay, a perma bull when a perma bull is not what I see. I also tweeted this out earlier today that, the Fed raised their inflation expectations over the 1, 3, and 5 year today. We've got layoffs going on. Amazon announced a bunch of layoffs, and we've got a bunch of both layoffs going on. Meta's laid off a bunch of people, and so there's a bunch of layoffs going on. The housing demand is dropping. Interest rates are rising. Inflation is there, but people want to say that the bottom is in, and that's just not my personal opinion. My personal opinion is the macroeconomic picture is a little bit more grim. I do think we're going to be coming up on some, once in a lifetime buying opportunities. And just like I've been preaching, if you're buying today, then that's great. But you just, don't buy today with money that potentially you're going to need tomorrow. I tweeted this out not too long ago that, I do think you might look back and, we would be, looking at potentially, a lot of these buys we make right now that maybe 5, even 10 years down the road are all potentially going to be great buys, but you're going to have the time. So, if you're just a buy and hold person and I'll let the chips fall where they may, then once again, I'm not knocking that. That's just not my personal way of trading. I'm an active trader. I look to buy and sell. There's definitely certain percentages of my portfolio with both AMC, GameStop, Tesla. There's lots of things that I have simply bought and hold. But other than that, I make my positions work for me. I'm just not going to let my money sit there and get hammered. I am going to make a return. Okay, that's my investing philosophy. If you're interested in that, shoot me a DM on Twitter, join the Discord. But, so back to futures. So this is giving me a little bear flag vibes, a little bit of I don't like, if I'm expecting bad news, but I get a massive dump before, then that starts to make me, I'm a contrarian thinker. So, it's kind of when everything's going one way, I start thinking about what's devil's advocate, what's the other way. So, if everything is pumping leading into news, then that usually gives me we're going to get bad news vibes. And the reverse is true. If everything is dumping leading into news, then that usually gives me, potentially good news vibes. So, like I said, let's go back to SPY. I just want to walk you through my thesis. So, let's go from the all-time high that we had here back in January. So, if we run, let me go to better time frame so you guys can see this. We'll go to the 4-hour. Oops. Let's get rid of that. So, if you run a reverse fib, which just means, so normally like if you do a fib, you go from your low to your high. Okay, so this is going to be the opposite. You're going to go from your high to your low. So, massive dump. Then we had the bear rally that came up to this trend line. And that was basically right between the 707 and the 786. So it came all the way back up to 461 before you then had the big next leg down. So if we're over here and we run from the next top, right, to the next bottom, to the next rally up, it came up here and pretty much hit the 707 right on the nose. And that was at 430. Before we saw another dump down. So, if we go from the top to the bottom, if we're looking at a similar area, so once again, somewhere between that 618 and the 786, essentially, then, well, we've already gotten rejected off the kind of the golden pocket area. So the 618 and the 0.65, that's going to be what's considered the golden pocket area. We're already seeing resistance here. So now, if we get a good PPI pump, then that I would imagine would take us, all the way up, probably at least to the 707, maybe even a little bit higher potentially. So that's going to be, obviously, if you have a bull thesis, that's what you want to see. You want to see a good a good PPI print that is indicating more signs that inflation might be cooling off a little bit. So my thesis still is that somewhere right here between this 707 and the 786, coming up here on this big macro, let me make this quite a bit thicker so you guys can see it easily. But this big macro downtrend, essentially until we break above this downtrend, probably retest it, and then continue to push back up, I'm going to remain overall relatively bearish. Now, short term, I do think there is potential to see more upside. I said on Twitter today, I think there is potential to see more upside potentially, maybe even to like middle of December, pushing up here to this 786 right around the 412. Now, like I said, I'm not looking overall, that high. Like I said, my bias is going to be somewhere between where we're at and maybe even a little bit higher than the 707. So maybe call it 407, 408. That's going to be where I would really look for the next downturn. Okay, so overall, that's just what I'm looking for. And if we get in here, I mean, you can see how much, and it's already, we've already been running hot, but I mean, you can see how much weaker, this price action is here. We're starting to get a lot of rejection. We had a massive sell-off towards the end of the day, which once again, so that way, for those of you who maybe don't follow me on Twitter, where is it at? I said, yeah, right here, we've got, so I said there's a tweezer top on SPY on the hourly, okay? And I showed an example. So a tweezer top pretty much looks like this, and then you get a massive downside move. So if we go in here, here's that tweezer top right here, and then obviously basically just a lot of selling pressure through the rest of the day. You're actually starting to get a 921, so your 9 EMA is crossing down. Typically bearish EMAs are lagging indicators, but I do like to use them as far as like support and resistance goes. So it's just another level of confluence to me that maybe this run might be potentially topped out. If we get a bad PPI print in this thing, this thing will really get shoved down hard. But you can already see how much it's been struggling here. So like I said, this is this first line right here. I'll just change colors so you guys can, once again, we'll make it a little bit thicker so you can see it. So this first yellow line is going to be the 618, and then the second yellow line is going to be the 0.5. Now, it's not unsurprising that the first time you're getting to these major resistance points on these Fibonacci ratios that you're getting kicked off of it. So what you would want to look for is overall, in this sort of local range right here, from down here, essentially you double bottomed right there. God, that just looks ugly. So we'll go back to white. So what you would be looking for here is this may not be the end of this move. Like I said, we could see short-term pullback with a long-term still push to the upside. Now, what you'd be looking for is you'd be looking for your downside targets of, so right around like 390, okay? And so 390 to me, that's an important place to hold. You can just see how important, this 390 area right here was a big double top beforehand. So coming down here, you might get a little bounce here and then a retest. So it might just not just be a straight line. Nothing's ever a straight line up or down. But once you get down here and you hit that 382, then that would be where you'd want to look to start, making your way on back up. And that is very likely. This is also too why I'm just a big, I'm not bullish or bearish. I'm just going to take it one day, one level at a time. So definitely want to see this double top region hold, which, like I said, gives you another level of confluence of the 390. But if that doesn't hold, you start losing 390, you start losing, this 618 or anything like that, and especially if it's a large impulse move down. So if we get, a bad PPI print tomorrow and it just shoves all the way down here and we see 380 tomorrow, if it's a big impulse move down, that's going to be more likely for me that the run is over. Like I said, you might see some kick ups, but like I said, overall I'd be looking for that next big leg down. So those of you that are interested in AMC, what I've been saying this entire time is I still would like to see a touch of this 618 right around here. So let me back out here so you guys can see what I'm talking about. It's going to be the macro, so the January low to the, unlock that so I can adjust it just a little bit. So the bottom of the January low to the top of the June run. This 618. Now, the good news is the volume has been picking up lately, but as you can see today, and we had a lot of pre-market volume. This is not a great daily candle right here, and it's on increasing volume. So I'm not saying the run is over. Okay, don't get the pitchforks out. Settle down. Sorry, you guys know I'm not talking to most of you. I'm just talking to crazy shit banana people on Twitter sometimes. So you started to get the gap fill here. So I mentioned that the macro 0.5, it started bumping its head up. And then when today, the carryover from Friday being such a good day, you just gapped right above it. Now you're coming back down. So if you want to see really bullish momentum in the stock still, then you'd want to see this macro 0.5 hold and start to push back up. You'd probably get more rejection there and start looking for some type of move like that. Now, what I think is my most likely, all right, is I think there's two gaps right here on AMC. They're going to need to work themselves out. I really do. So, yes, the volume was nice on these moves up, but I still think we're going to see these gaps get filled, okay? And essentially come down here and either get a double bottom, or, like I said, that's going to give you that macro touch of the 618 at that point in time. So AMC was halted. It was halted to the downside to the day, but typically AMC hasn't had a lot of luck. Once things get halted, you usually see a lot of downside after that. Once again, not saying that's going to happen. Like I said, I've already given you the bullish retraces. So, 382. Your most bullish one is holding the macro 0.5. That's if you want to be, so perma bulls. That's what you want to see. So you want to see that kind of move. Or another reasonably move is going to be just come down here and you hit the 382. And then you come up here and you start making that move towards the upside. To me, the most likely thing is you're going to kind of work down this way. And once again, it won't be just a straight shot. But then you'll get this gap fill. Then I'd love to see it, right around here, even a golden pocket move, and then starting. I tweeted out that that's going to be my most likely. AMC doesn't like it. It does leave gaps behind. So all the people that are like, AMC got lots of gaps out there. Yes, it does. But typically when it's going to leave a gap is you're going to have a drastic increasing volume that's going to go along with it. So, back here, obviously, so back on the daily chart. So when you gapped up here, obviously the volume was picking up, and you really had a gamma ramp. Dadgummit. And then same thing in June. You started, once you started, this gamma squeeze right here, you also had a significant uptick in volume. You had 300 million shares traded. Back here in January. 250 million shares traded. What do we got over here? Well, we got 40 million shares traded. Still a little bit of difference, right? And no, not all gaps have to be filled, but if you look, it's usually about 90% of the time gaps are going to be filled. And that's not the end of the world, okay? Like I said, it can just come back down here, gap fill here, and start to move out of this range, okay? Now, also too, if the overall market does, keep running real nice and everything like that, rising tide lifts all boats. I do think AMC can continue to move up with it, but that's what, if the market has another big leg down, AMC is not going to be immune to that. So when the market was running in August, AMC ran with it. When the market was running in March, AMC ran with it. If the market continues to run now, AMC's going to run with it, okay? But just don't act like it's separated from the market or negative beta or anything like that. Yeah, it'll have days where it runs better. Yeah, but overall, you're pretty much going to see similar moves, okay? That's just what I'm getting at, okay? That's everything. So what I'm looking for on SPY is if we want to remain, bullish, like I said, we want a good PPI print. We want to bust out of this, but until we start clearing, these macro downtrends and everything like that, just like I've always talked about with AMC, until you start clearing, all this kind of stuff, until you really start clearing all this kind of stuff, overall, it's in a downtrend, okay? Till we start clearing all this stuff, overall, bear market's not canceled. So this is what I'm looking for. So yeah, right now I'm a bear. I'm shorting pops. Just the way I'm playing things. Please trade your plan. Do your thing. All right. So yeah, coming up here, you know, I still think even if we get a good PPI print, until we kind of do one of these, bust through with some volume, do one of these, and then continue. I'm gonna stay perm bear. We break through this with volume. Once we come down to retest right around in here, then I can be looking at the long-term bullish scenarios. But until the Fed really starts sounding more dovish than hawkish, until they really back off on interest rate hikes and saying, okay, yeah, we feel like this thing is where it needs to be and it's under control. This is just it's just my thesis. So hope you guys kill it. But like I said, for me, I still think we've got one more leg down. So hope this video was helpful to you. Like I said, please like and subscribe, all that good stuff. Much love, and until the next video, I will see you guys later. Have a good one, my friends.